Interesting day today with price action as President Biden and our Fed speakers present a hawkish tone which inevitably pressured risk-on assets of all kinds to the downside. This is the moment where we as market participants must pay attention to macroeconomics for potential signs of weakness. Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into ticker symbol GTII. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, and do that whole thing that allows us to make the channel thrive, okay? So let's go ahead and take a look at this chart on this side, okay? I would like to present to you a quick little note here because it just, it seems to go around that, you know, whatever. Just listen to it for yourself. Notice how the SMA 14 is not in the gravitational zone up here, right? In fact, we're closer to this gravitational zone where we can be pulled down. So those are kind of the little signals that are preventing me from thinking that there could be a continuation. So the stats. So yeah, team, that's just so that we can go ahead and keep things clear. This is the importance. That marks the importance of you watching the entire video. Please go ahead and do that, right? So let's go ahead and now pop open the next chart here, and this is just some of the things that we have to observe here. It is not GTII here that ended up doing this. GTII was definitely set for a little bit of pressure, you know, a little pressure to the upside, but please go ahead and feast your eyes here. What you're observing here is the SPY ticker. This is the S&P 500. You're looking at the Russell 2000 index here for small caps. You're looking at the NASDAQ, big tech right here, and you're looking at GTII. Please notice the please notice the very notable correlation between the indices and the chart of GTII, and notice how the sell-off came at pretty much exactly the same time. If we are not paying attention to macroeconomic let's see, catalysts or data releases, then we are likely going to be facing a hard time in the market as market participants. Okay, team, it is critical that we must pay attention, which is one of the reasons that I personally don't like diamond handing, and I don't like holding assets over too long because of reasons like this. I'm a short-term trader. I'm systematic, right? So I just want to go ahead and present to you the potentials over here. Okay, team. So what I'm going to do here is just get rid of the QQQ, the IWM, and the S&P 500 here, right? So that we can go ahead and observe our analysis in this side of things, right? So if we can just scooch on over here and just take a look at the day's range today, right? This was the range of the candle from today. So you can notice here that we actually pushed to the upside just a little bit at around it looks like we ended up on a top side of 25.50. So we were already, check this out, we actually gapped up. We opened at 25.02 from a prior close of 24.38 and still made our way up to 25.50 eventually, right? Before experiencing some really interesting talks of World War III and hawkish Fed and in all kinds of silly stupidities that created the market to sell off, which then pressured GTII to a downside, okay? So now the only thing that's going to be able to hold us for support for now is something called a fair value gap, right? So this is called a price imbalance. So, or either of those, right? It was coined by ICT, that's the Inner Circle Trader. So let's go ahead and just take a look at this and observe, right? So I've noticed that he uses it within Forex and also within the immediate short-term time frames, specifically the 1, 2 minute, maybe 3 minute intervals. In this case, I've actually noticed and tested it in equities, and there has been a pretty nice hit rate within this. So this is what you're observing here. You have a solid body candle here with the 2 wicks on the opposing sides. They have a gap in between, right? So you got to focus on that as your price imbalance, right? So that little bit of a fair value gap is the one thing that may be able to hold us as with support for the incoming day. So we got 2 targets here, right? 22.63 to about 22.51. If price action does come down any more, then we're going to go ahead and face support here at 22 cents. And it's a highly confluent 22 cents, by the way. If we draw a horizontal line, take a look at all these candles here. There's a lot of the target is sharing, I mean, it's confluence with a lot of other candles there too, right? Including this very obvious one down here. Okay, so let's go ahead and take a look at more of the immediate short term to see what we have in store for the asset, right? So 5-minute time frame, got to look at this, right? There is a little bit of a break here below the EMA 200, which could then pressure the asset down to guess where? It's looking like 2180. So we were just speaking of a 22-cent bottom here. What I am looking at too is your RSI, right? So the RSI is currently resisting from the SMA 14 inside of the gravitational zone for a pull down Now, the opposing side's gravitational zone may be able to catch us, which is potentially what I'm observing here as the 22-cent target. If we go up, let me see if we can find the support from the RSI at any point here, and then we'll be able to tell. Right, there we go. So it looks like the bi-hourly time frame would be that time frame to catch us, right, with the SMA 14 down here. So yeah, that if I gotta say, right, 22 cents looks to be about correlated with that, right? But if it does face, it is kind of a distance, right? So we have to use our discretion here to notice where and when we could bounce from. So guys, I have my little guy right next to me right here. So if he comes by and says hello, just know that it's him just trying to check in on us and see if we're making the right decisions in the market, right? So, yeah, let's take a look at this, right? Slightly below the 22-cent zone, there is a 2180, which naturally, right, rhymes with our previous target that we were just looking at. 2180 could be paired with a downside of about 2104 before facing a bounce to the upside. After that, team, it's going to be a little bit difficult because we do have the EMA 9, EMA 7, we have your EMA 20, SMA 50, SMA 200, and EMA 200 to combat to the upside. Not to mention historical price action here with prior supports and resistances, right? So, and you know what? I guess to its fairness, if we observe this in maybe even a 3-hour time frame, which let me go ahead and expand it to this chart over here. Or maybe, let me see, the 4 or 6 hour, right? Or let me see the 8 hour. Yeah, the 8 hour could potentially do that, right? So the 8 hour time frame definitely looks like, yeah, this was your evening star here for a downside bearish engulfing pair. This 8 hour time frame bearish engulfing. It's a bearish buy formation here, tri formation with the outside bar with a red wick at the bottom. Usually red wicks get taken out, so we take out that red wick, come back down to the areas of about 2104 to 2180, and then please remember that we did speak. Sorry, what the hell? We did speak of those lower targets in the 5-minute time frame back here, right? So just heads up with that, right? There may be some pressure to the downside here to observe, and then the markets are not. They're not really agreeing here. Whatever was said today from our policymakers and whoever else, that was not the best thing to say in the markets. As you can see, that there was complete negative sentiment around that. We don't want that. Okay, so yes, if we don't succeed, the bounce from the 2104, next targets to observe, we're going to have to go ahead and keep an eye on that pretty much 20-cent flat, but I would say that it could be about 2012, right? So we'll put a 2012 right around there. And then followed by, you know what, that would be the range exactly. Actually, you know what, just like this. There we go. That would be the bottom side of the range, failing that 2104 with I would see at least in a 30-minute closure beneath that 2104. The likelihood of coming back down starts to grow, right? So we got to be very careful there. So 1903 to 24 is the bottom bound from this on an 8-hour time frame, seeing that we do have that tri-formation breakdown, right? Bearish tri-formation. That's going to be your evening star paired with a bearish engulfing and a red outside bar, right? So that is going to likely bring us down for a continuation into tomorrow and maybe even the following day. Okay, so let's just go ahead and be patient with the markets and let's see what we have. Okay, so let's go ahead and take a look at this. The stats window, just to see if we got anything in order here. Okay, well, there you go. Full of discretion, right? Our daily ATR low leading to a 21.5. We are already looking at a 2104, right? So this is 2157. We're looking at 2104, 2180. So very much in literally the 50% mark between our discretion. And if we were to continue to the downside from here, then we can observe the lower bound of the 1 standard deviation at 1912 and take a look at our discretion. We're looking at 1903 to 2004. Guys, this is rhyming very well. Please remember, team, that I am offering the ArcMasters trading course, but this is going to be in the form of mentorship, and it's going to be for strategies trading. Guys, today in the ARCa Bulls trading team, we must have made a combined over 2,000% gainer. Me, myself, I made around over 600% trading today, the tickers that we traded. And at least another 2 people made over 600% with me as well. And the others probably made anywhere between 30% to 100% each, all traded today. I encourage you to join the ARCa Bulls trading team. I'm going to go ahead and put the link right on the top right-hand side over here, right? That's going to be your 1050 mark. And we'll get this thing rolling, okay, team? And if you would like to get in touch with me for the Strategies Mentorship Program, please reach out to me at ArcMastersCourse at gmail.com, and we'll get you the disclaimer, the syllabus, and all that pertinent information to get you on the right path of trading, right, team? So please, let's go ahead and be careful in the markets, right? Please play with proper risk management, and everything else will line up pretty nicely, okay, team? Thank you so much for stopping by. Let's go ahead and see if we can observe the markets tomorrow. Just one thing, right? If we do end up making a bounce to the upside, we always have that. We always have that 2550 as a resistance, right? But I'm not sure that we can be able to reach all the way to the 2550 after a bounce. There could be a touch of the 24, maybe even back to around 2257. 2257 to 24 could be the upper bound here if we do experience a bounce from these zones right here that we just mathematically backed, okay, team? So please be careful in the markets. Thank you so much for watching. If any questions, reach out to me. You know where to reach out to me, okay, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell, and I promise I will, mañana. Adios, team.